Okay, so this is a market update as of March 7th, 2022. Right now, what you see here is the S&P futures, and looking at the price relative to the 6-day moving average, obviously the trend is moving south. And like I've been talking about, this gap here at 4,000, it's still left to be open, and most likely it's going to fill sometime this week. We had a pretty massive sell-off today, and then this candle here either bounces to retest the 6-day moving average, which I think is going to happen within the first 30 to 60 minutes, and that should be another opportunity for a short entry with puts. Now, I don't think a lot of companies are going to be moving higher as S&P and NASDAQ move higher. But if it does move higher at the open at 9:30 a.m. Eastern time, while all the stocks are kind of adjusting a little bit higher, then it's best to look for a short entry and then see if we can get the sell-off to cascade all the way into 4,015 by the end of Wednesday. JPOW could rip the markets up higher on Wednesday, and Wednesday morning could lead to a rally. So taking puts here, looking for that sell-off going into Tuesday and Wednesday, that might be a little bit tough after a sell-off. If you want to be more conservative and just watch, and you're leaning toward buying calls, then maybe wait for the gap to fill first. After, especially when the futures are selling off aggressively into a Thursday and it fills the gap, and that would set up for a very nice rip your face off rally. So if you're conservative and not looking to buy puts, then wait till we get that gap to fill. That's just another 4%, right? You can day trade these sell-offs, especially if it revisits the 6-day moving average today or tomorrow, and then look for a sell-off from JPOW to create an extended position in the indices, where the price of the S&P is about 7% away from the 6-day moving average. So basically, that's the bacon, lettuce, and tomato. It could happen on Thursday and Friday, but I think the sell-off will probably happen on Wednesday. And if you're looking for something conservative, wait for the gap to fill down here at 4,000, and that should be a 7%. That should be a 7% distance from the 6-day moving average to where the gap is, and then you're probably going to have a very good opportunity to see a rip your face off rally, hopefully on Thursday or Friday, because Wednesday it seems like it's pretty bullish for, generally Wednesdays are bullish for Dow. Tuesday after 10:30 will be a little bit choppy. That's basically because we're in the BLT. And then Friday morning, we could see that last flush Friday early morning at around 3, 4, 5, 6 a.m. and then take out that gap. And then we see a big bounce on cycle 3. So that's still in cycle, still scanning on A6. So once you see 1 and 2 and 3 green dots, that's going to be the time where the markets are going to stage a rally, and a really big rally too. So the NASDAQ is the same thing. So the NASDAQ is scanning on A6, it's got a purple D. Obviously the purple D is probably showing more downside, especially with the A6 here scanning. Then it's hard to kind of tell where this is going, where the bottom is for this one. S&P is a little bit easier because it has a gap, but the last time it had a rip your face off rally, that was back here. That was about the move was from here to here. That was about an 8%. Let's say 7%. So then if we take this price here, where the 60 moving average is right there, and drop it so I would say a little bit at around 12,000. 13,000 would be the level that I would think that it would be a good time to buy the dip at the open. So I don't think that's going to happen tomorrow. I think tomorrow we bounce a little bit and then roll over. So Wednesday we have FOMC, and then Thursday probably the last attempt for the sell-off, going into a pretty bullish Friday. If we look at Google has a gap right down here at 2,462, but it is also extended, right? And then this long candle from 2 weeks ago, it pretty much gave back all of those gains here. And I'm looking at Tesla too, and it also has a very similar long candle. And I think I'm going to try to catch this double bottom all the way down to 700. I think there's probably a good chance for Tesla to do a double bottom here. But the question is it going to do that in one long candle from here down to here, like a 12% move, right? And that could be, there has to be a trigger, right? And we have lots of triggers in the markets that's causing the market to trade in a bearish direction. We have geopolitical risks, we have interest rates, inflation, you name it, we've got the whole entire thing. And everyone is losing money, like left, right, and center. So, I mean, it's pretty brutal out there. For option-wise, it's pretty tough to trade. Especially last week, I was pretty confident on my trade that the market was moving lower, but just Tesla was just way too strong. I'm gonna catch that Tesla eventually, but yeah, that's what I'm seeing here. The overall market, everyone is losing so much money, and it's just pretty brutal, like for the long-term game of just looking to, you know, make some quality investments. But at the same time, this is probably a great opportunity to make an investment long-term, but make sure it's not too long, right? Because you can't, I don't think you'll be able to enjoy life when you're like 150 years old. All right, so Tesla, that's the BLT to the downside. So probably Tuesday we don't see anything. And I think there's some sort of news around the White House in terms of the crypto policies. That could trigger Tesla to drop all the way down to $700 by Thursday. And then a big ginormous bounce back to the 6-day moving average. So that's a trade idea. Shopify, what a brutal sell-off. I mean, here and here and here and here and here and here, everyone's just, you know, I was trying to catch the BLT here, right, and then it failed, and then it sold off even more. Where's the bottom for this? I mean, I don't think it's going to go all the way down to zero. I mean, it could go down to 19 bucks. You never know, right? This market could take, I've seen, one of the biggest market crashes I've seen was, I can't remember exactly the year, but it happened during was it during Obama? I think Nvidia dropped all the way down to like $50. So Shopify is at 560, and it could easily go all the way down to like $100. Who knows? But I think what it looks like it's happening is it's trying to make a 52-week low, all the tech stocks. So the 52-week high was in November 19th for Shopify, right? And November 19th, 2021, Tesla was November 4th. So if we use like a calendar calculator and just do some basic 52-week calculations using Tesla, then, and we add 52 weeks, right? Then the market should bottom by November 3rd. I don't know if that's an election. No, it's not an election thing. It's only Biden's first year. He's doing a great job. So market's crashing, everyone blames Trump. Market's crashing, nobody blames Biden. It's interesting how that works in the States. But I'm just throwing some ideas out there that November 4th, 2021 was the 52-week high. And then if a stock makes a 52-week low, then November 3rd is going to be the plus or minus 1 or 2 months. So it could be September or November. We get a 52-week low in everything. Okay, because it's not quite there yet. And the low could come in sooner than later. Like for Tesla, it could go all the way down to 570 because there's a gap there. So I'm very interested in this long and hard candle here. And with the sell-off this aggressive, that's a BLT to the downside, setting up for another BLT to the downside. I want to try to buy Tesla where the 6-day moving average is. So the 6-day moving average in this case is still up here at 850. Okay, so it's obviously going to drop down a little bit tomorrow. So this is 885 to 860. Let's just say $20. So 847 to 827. I want to see if I can try to buy some Tesla puts for another day trade and see if that can work out in my favor and try to catch this $700 catch those $700 puts, which are trading at 220 right now. And I did not open those up. Obviously it this morning with the TGIF closed that out at $4 and then tried to catch a mean reversion play on Roku, which did move up to 3%, and then it quickly, what happened to Roku, closed down at 8%, which is ridiculous. Okay, so it looks like the Nasdaq is still selling off, and it's kind of extended right now. Later at 4 a.m. it could bounce, and then squeeze everyone out, and then get back into a sell short position and go back lower, right? The SnP gap at 4,000. I've been talking about it for almost 4 months now. The 4,000 gap. It's still open. So we need to get rid of that gap ASAP. Looks like there's a bullish wolf wave here. And the reason why we wouldn't take it is because we don't have enough redundancy here. Plus the lines connecting 2 and 4, 1 and 3, they don't converge to an apex. So, but it does give some idea that there's this opportunity for the SnP to move back up to that 6-day moving average. That's a 2.2%. And rip your face off rallies can happen anytime where the SnP or the Nasdaq is displaced about 2 to 7% away from that green dot. So technically here 2.21 is an opportunity for it to revert and retest that 6-day moving average, and then if it gets rejected, then we're going down. And then let's take a look at some other stocks. Just probably look at 750R. Apple, it's got a potential to get really extended all the way down here. And if that happens on Tuesday, right, if everything sells off, because I think 750R, for most people, we're short Apple and Tesla. A few people who are a little bit, they're a little scared. I had to reduce some of the short exposure because they get a little too scared, right? And I have to answer all the questions. But here, Apple, it's got this BLT to the downside, right? So then if what is true, if this is a BLT, then Tuesday will probably be a very boring day, or a very bearish day that drops Apple all the way down to 151. That could happen in one day. With Jay Powell stepping up to bat on Wednesday, I don't think we want to step in front of the Fed. It's important to understand that the Fed will do whatever it wants, and we also understand that the gap is something that we want to get filled. And if we get into a situation where Apple drops from 159 to 151 by the end of Tuesday, that's going to be a pretty good risk and reward trade for mean reversion back to the 6-day moving average going into Wednesday. So I would definitely look to buy some Apple calls if Apple closes at 150, like 152, 152 on Tuesday at the end of the day. So what I'm saying here is that there's going to be a pretty nice opportunity to catch a rip your face off rally where everything goes long and hard. But the sell-off right now is quite crazy. It's probably worse than when Trump was in office. This is probably one of the worst I've ever seen. And I don't know, exactly what to say other than just make sure you don't go broke. Okay? But, as long as you have a plan and you know how to manage risk, right, then you don't really need to do anything at all, right? Most people actually don't do anything and still make a lot of money. So I guess my plan, I still have Teslas are drawing down. It was about 1,500. Now they're worth like $600, and I'm getting ready for a potential. Looking at the futures, they're only down 0.21. So if you remember what happened last night, the futures were down like 2%, 2.2, and then at the bell, it was almost opening up at green. So right now the futures is not really doing anything. So I don't think we're going to be buying the dip at the open. I think it's probably best to watch it rip up to the 6-day moving average and then look for an opportunity to sell short, or if you're conservative, just wait till the gap fills. Like wait till the Nasdaq at night is dropping like 3 or 4%, right? And then when that happens, take a shot on some gap fillers on Thursday or Friday, and you're going to make a lot of money on those 0 DTEs. So I think that's what's setting up here. Every day as we move toward Wednesday, the markets are going to keep on dumping and dumping, and it's going to exhaust all the sellers, right, who are shorting the market. It'll dump before the market opens. We should see a big flush while the markets are closed. And when the markets are about to open, we will look to see which one of the pre-markets is down the most. So for example, if Nvidia is down 8% on Thursday before the bell rings, right, then I want to be looking to buy that dip, because it's going to open up and try to fill that gap really fast, and the premium should be super cheap. But it's not, I don't think it's going to happen tomorrow. Okay, what's going to likely happen tomorrow is within the first 30 to 60 minutes, we might get a little bounce. Okay, and then roll over at 10:30 a.m. as per usual, and flush right into the end of the day. So if there's any, I'll be on voice again to try to short the market. I'll try to short it at this time. But if you're, like I said before, if you're conservative, you want to take a more conservative approach where everything in the pre-market is gapping down 8%, then that's going to be the time to buy the dip on some 0 DTEs and some stagger positions. And that would be buying contracts at $1 and closing them off at like $10. That should be a something we should focus on. So that could make a lot of money. You put in 1,000, you make 10,000. And if you want to have that successful trade, then you might have to trade really low, trade less tomorrow and Wednesday, and then let the Fed do its thing. The Fed might rip the market higher on Wednesday, okay, or Friday. It's not going to be, so Tuesday is going to be, we kind of know what's going to happen on Tuesday. 10:30 a.m., it chops and then maybe rolls over, right? Because everyone's kind of scared of the Fed. And then Wednesday, it could, depending on how it closes on Tuesday, it could rally. And then Jay Powell says something that causes the market to rally on Wednesday. But as you may know, the interest rate hike has already been discussed last week. So there's nothing new that would cause the market to sell off even more on Wednesday, because it's already priced in. So that would mean that Wednesday could be pretty bullish. And then if that's the case, then you know what happens after the bullish market, after Jay Powell, then we probably see a sell-off into Thursday. And then if the futures keeps on selling off on Thursday into Friday, and the Nasdaq's down 2 or 3% on Friday morning at 6 a.m. Pacific time, then we will see the pre-markets in a lot of the tech names down another 5, 6, 7%. And then that's when you buy the dip. Okay, so VIX is still climbing higher, and it does look like it might drop tomorrow to retest the 6-day moving average. So I'm not sure, that I would want to buy puts right at the open. I would wait for it to kind of pull back, and then maybe look for a trade. So tomorrow at the open, because the VIX is a little extended there, it could pull back and stocks could move a little bit. You can try to catch that make a quick day trade for 20, 30, 40%. But if you're looking for a really big grand slam, then that's going to have to be around Thursday and Friday. Wednesday, probably bullish, because that's the interest rate hikes is priced in. Thursday might be a little bit bearish or very bearish. And if it's very bearish and the gap is not filled, if the S&P gap is not filled by Thursday, it's going to be filled by Thursday, probably Thursday or Friday morning before the bell rings. And that's going to be an awesome buy the FN dip opportunity. Okay, so I don't have anything really else to say. The market is a little bit tough, but there are some pretty big moves here. Like for example, This kind of reminds me of the Tesla trade in Boeing. So I might even look at Boeing tomorrow because it's right here, and the 6-day moving average is probably somewhere around 186. That's a pretty big mean reversion play. That's a 10.47% move. Just capturing 5% of that would be pretty amazing. So there's tons of gaps much lower, down to 158, and there's all these gaps down here to 132 to 122. Wow, it could still keep on moving lower. But I think with Wednesday, if this, let's say this gaps down tomorrow morning, then it might just pump and then move all the way up here with a bullish engulfing candle, right? And then bullish engulfing candle is obviously bearish, right? So that's a possible day trade on Boeing. Shopify, its 6-day moving average is, it's also 10%. When it was here, the 6-day moving average was 13%. So, and there's a gap right there at 528. Yeah, so it's pretty tricky to kind of figure out how much lower this thing can go. But if I did some Fibonacci retracements here, from there to there, and yeah, it looks like it can go down to $400, $500 to 470, all the way down to 300. That's these are all possibilities. Okay, and let's take a look at Amazon. Completely destroyed, and it's got a chance to fill the gap at 2,630. That might be the area to buy the dip. Google also has a gap there too. Netflix doesn't have any gaps. Oh, well, except the one right there. Jeez. So that's not looking too hot. That might actually, it looks like it's going to break out. If you flip this upside down, it might look like it's breaking out down to the next psychological target, which is 300 on that A6. So that's a purple D, bearish purple D. Might want to see if I can catch this one. Roku is way too cheap, so the premiums, catching the premiums move, this is probably not worth our time. Boeing, this thing probably going to rip up higher on Wednesday. Coinbase, yeah, I don't know, it's going Bitcoin. Facebook, yeah, look at all the wolf waves not working because of the uncertainty. And then finally, Bitcoin futures. So Bitcoin futures looks like, which is well correlated with Coinbase. It's also got an A6, and I think if we get any pump in Bitcoin, Coinbase should be moving with it. But after the pump, we get the dump, and I might want to short coin as well. I think coin is trading at around $200 to 161. Okay, 161 is really low, so I want to trade something that has like a little bit of that can appreciate the premium super fast. So Shopify, Tesla, Amazon, Google, and Netflix, maybe Facebook. So those are the ones I would probably look for. Apple's always nice because of the liquidity. The spread, the bid and ask is just by a couple, like 2 pennies. So that's also a good another option there as well, especially after FOMC. You can probably see this thing roll over. Tuesday, we probably see it roll over at 10:30 a.m. Eastern time and make a move all the way down to 152. But I think at 152, the contracts for Apple weeklies. Okay, it's not populating fast enough on my screen. Let me just check here. So Apple 152. Yeah, so they're like worth 80 cents. Which means that if it does get down to 152, then you get a buy put contract for 80 cents and maybe close it for like $1.80 to $2. So it's a double, but I mean, we're trading options. We should try to look for more than double, like 500 to 600%. And that type of trade, the 600% moves, the 10x moves, I think it's gonna give us. We're gonna get an opportunity to trade, get an opportunity to have a big win. But that's when this gap fills. So that if that fills, if the market starts flushing Wednesday night, even Wednesday morning, because Tuesday you get a little bounce, and then Wednesday it starts to sell off hard, like 3%, 2%, because of the war, geopolitical risks. Then even Wednesday might be an opportunity to buy the F and dip. Okay, so anytime, any moment this week, if we just remain patient and we see the futures after the market closes down 2 to 3%, then that means at the open on that day, the following day, we're gonna buy the dip. AMD. Yeah, so AMD, man, AMD could go down to like 80 bucks. So like what I'm saying here is like AMD, Tesla, Google, Amazon, if we see the futures down 2% at night and also at the open, we're gonna buy the dip. And it's just right now that's not happening. It's flat. So we're not buying the dip tomorrow morning. We probably could see a little bit of a bounce and then roll over at 10:30. Okay, so there's a higher chance for a little bounce in the first 30 to 60 minutes of the day, and then we roll over. But I'll repeat this one last time. At night, if the Nasdaq is selling off 2 to 3%, get ready to buy the dip on the next day. Okay, so thank you very much for your time, and I'll see everybody tomorrow morning.